Welcome back to Dinar Community Channel. The global currency market was shaken to its core today as verified reports began to circulate about a new, unprecedented rate for the Iraqi Dinar IQD appearing on international banking screens, crossing the $7 threshold for the first time in modern history. For years, the idea of a revalued dinar trading at such a high rate has been a point of speculation, debate, and heated controversy within both financial circles and the vast community of currency holders worldwide. Now, it appears that what many considered an unlikely dream has abruptly shifted into reality, catching even seasoned market analysts off guard. The confirmation first came from multiple banking insiders in Europe and the Middle East, with screenshots of currency exchange terminals showing IQD USD rates above $7. These reports quickly spread through both official and unofficial channels, prompting immediate reactions from traders, investors, and the broader financial press. While rumors of incoming rate adjustments have circulated many times over the past decade, this particular development has a key difference: it is being verified across multiple jurisdictions, not confined to one country or a single banking institution. Currency dealers in Dubai, Frankfurt, London, and Singapore have all confirmed seeing similar numbers appear on their interbank systems. This level of alignment suggests that the change is not a technical glitch or a limited test, but rather the reflection of a coordinated shift in international Forex platforms. Even more striking, several banks in the United States are reportedly preparing to update their customer-facing exchange boards in anticipation of formal rate activation, signaling that this revaluation might be moving from the realm of back-end systems into the public domain. The implications of a $7.00 plus IQD rate are nothing short of extraordinary. For perspective, just a few years ago, the Iraqi dinar traded at levels that were almost negligible compared to the US dollar, hovering in the range of 1,200 to 1,300 Iraqi dinars per USD. At such a rate, Iraq's currency was one of the least valued in the world, weighed down by decades of conflict, economic instability, and sanctions. Even with ongoing speculation about a revaluation, few mainstream economists publicly entertained the idea that Iraq's currency could leapfrog to rates surpassing even those of the strongest currencies, like the Kuwaiti dinar. Yet, the $7.00 plus figure now appearing on official Forex terminals would place the Iraqi dinar among the most valuable currencies in history, dramatically altering Iraq's financial standing on the global stage. Such a move could only be the result of a carefully orchestrated plan involving the Central Bank of Iraq (CBI), the International Monetary Fund (IMF), and possibly a coalition of global financial institutions working to recalibrate the country's exchange rate in alignment with its oil-backed wealth, foreign reserves, and broader economic recovery. For dinar holders, the news is electrifying. Many have waited years, some decades, for an event like this, often enduring skepticism from friends, financial advisors, and even other investors. In the days leading up to this announcement, whispers of pending rate changes grew louder within certain private banking circles, with some insiders hinting that a major, international adjustment was imminent. Still, few could have predicted that the revaluation would debut at a level so far beyond the most optimistic public projections, which generally topped out around $3 to $5. One of the most intriguing aspects of this sudden development is the question of timing. Iraq has been steadily implementing financial reforms, upgrading its banking infrastructure, and aligning its monetary policies with international standards. In recent months, the country has also strengthened ties with key trade partners and diversified its economic partnerships beyond the oil sector, including agreements in manufacturing, agriculture, and technology. Many analysts now believe these structural changes laid the groundwork for a massive currency correction, with today's $7.00 plus rate representing not just a boost for Iraq's monetary policy, but also a signal to global markets that the nation is ready to compete on equal footing with top-tier economies. From a geopolitical standpoint, this revaluation could have far-reaching consequences. Iraq's newfound currency strength will inevitably shift the balance of trade in the Middle East, potentially drawing new investment from multinational corporations eager to tap into a more stable and liquid Iraqi market. It could also embolden Iraq's government to take a more assertive role in regional diplomacy, leveraging its economic power to influence trade policies, infrastructure projects, and energy agreements. On the domestic front, a higher-valued dinar could be a game-changer for the Iraqi people. A stronger currency means increased purchasing power for citizens, potentially lowering the cost of imported goods and stimulating consumer spending. This, in turn, could lead to a surge in local business growth, job creation, and overall quality of life. However, experts caution that such a drastic revaluation also comes with risks, chief among them the challenge of managing inflationary pressures and ensuring that the benefits of the stronger currency reach all segments of the population, not just the elite. In the currency speculation community, the reaction has been nothing short of euphoric. Social media platforms dedicated to IQD discussions have exploded with activity, with holders sharing screenshots, debating the sustainability of the rate, and swapping tips on how to approach the exchange process. Many are now urgently contacting their banks, wealth managers, and tax advisors to prepare for the possibility of exchanging at these unprecedented rates. Still, there is a measured tone among more experienced investors. They know that while rates on international screens are a critical indicator of official recognition, they do not always guarantee immediate access for retail customers. In past cases of significant currency adjustments, banks have sometimes rolled out new rates in phases, prioritizing institutional clients or high net worth individuals before opening the process to the general public. Whether the $7.00 plus IQD rate will be universally available from day one remains to be seen. For now, market watchers are keeping a close eye on the Central Bank of Iraq's next moves. An official statement from the CBI is expected within hours or days, and that announcement will likely confirm the rationale behind the revaluation, outline the mechanics of the exchange process, and address questions about rate stability moving forward. It is widely anticipated that Iraq will link the dinar to a basket of global currencies, including the US dollar, euro, and Chinese yuan, to ensure greater stability and prevent excessive volatility in the early days of the new valuation. In parallel, there is speculation about how this change might influence Iraq's domestic financial sector. Banks across the country have been modernizing their systems, introducing digital banking solutions, and expanding their physical branch networks. With a stronger currency in play, Iraq's financial institutions may see an influx of deposits, foreign partnerships, and new lending opportunities. Such developments could further strengthen the country's credit profile, making it more attractive to global lenders and investors. The oil market, too, will feel the ripple effects of a stronger dinar. As one of the world's largest oil producers, Iraq conducts a significant portion of its trade in US dollars. A higher-valued dinar could lead to renegotiations of existing contracts, adjustments in export pricing, and potential shifts in OPEC dynamics. For oil-importing nations, this might mean higher costs if Iraq chooses to leverage its stronger currency in negotiations. Conversely, Iraq could use its newfound strength to offer favorable trade terms to strategic partners, enhancing its geopolitical influence. Outside of Iraq, other nations with undervalued or unstable currencies will be watching closely. A successful revaluation at such a high rate could inspire similar moves elsewhere, particularly in resource-rich countries seeking to break free from decades of low currency valuations. The precedent set by Iraq's leap to $7.00 plus could reshape the conversation around sovereign currency management and the role of natural resources in supporting stronger exchange rates. While the $7.00 plus rate is now appearing on international screens, experts are urging holders to approach the situation strategically. The immediate temptation for many will be to rush into exchanges, but financial planners are warning against impulsive decisions. With such life-changing sums at stake, it is crucial to understand tax implications, potential fees, and the long-term consequences of sudden wealth. Additionally, given the likelihood of scammers exploiting the hype, security and verification are paramount. For now, the eyes of the world are firmly fixed on Iraq and its currency. This is more than just a numbers game, it's a seismic shift in the economic landscape, with the potential to affect trade flows, investment strategies, and even political alliances. Whether the $7.00 plus rate marks the start of a sustained era of prosperity for Iraq or simply a temporary spike remains to be seen, but one thing is certain, the revaluation has already made history. The coming days will be critical. As the Central Bank of Iraq addresses the world, as banks adjust their systems, and as millions of currency holders make decisions that could alter their financial futures, the dinar's revaluation will be a live case study in how a single currency move can reshape both national and global economies. For those who have waited, planned, and held their IQD through years of uncertainty, this moment represents vindication, and perhaps the start of an entirely new chapter in their financial lives. Like and subscribe for more videos.